Hey, Vitaly. That's a good question. Okay, I don't understand what's the behind the words of environment. This is great. Okay, why is it great? Because we need to understand narrative. Okay, so whenever we read the chart, we must understand what we read, and that's all. Understanding narrative. So when it comes to thanks for the detailed answer for gold and bonds too, right? Yes. So there's a hierarchy of markets. The most important markets would be dollar, gold, and bonds. These control the world essentially. And to summarize this, we now get risk on versus risk off conditions. So that will give the biased and side of the market to trust for trading stocks or trading indices or trading currencies. Okay? And from this, we can determine basically two environments. We can identify consolidation environments and expansion environments. And I want you to do study on this. Okay? So go on the daily chart and find quarters. So Q1, Q2, Q3, Q4 of any year. And it'll either be a consolidation type quarter or an expansion quarter. And study the difference between two. Okay? So for an expansion, this is an expansion quarter, but not as expansive because its monthly chart's still in the range, right? But go into the years and quarters or any pair where the market's been expansive for a quarter. Okay? And then since it's an expansion condition, the environment, okay, is expansion. The daily candles are one-sided. Okay, so they'll just pick one side over the other. And then you'll see, okay, out of 10 days, it leans more towards one side of the market than the other. So this could be like bearish, 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 bullish, bearish, bearish. Alright, so then your directional bias is just one-sided bearish. Okay? But when it comes to consolidation, it's a bit different. So when it comes to consolidations, it's 50-50. Alright? So market will be stuck in a range like up, down, up, down, up, down. So markets will be stuck in a range like this. So when market's stuck in a range like this, the candles are 50-50. And when it's 50-50, there's no edge. It's not one-sided like this, so edge is pretty hard. So what can we do? Okay, so what we can do is we can wait for these prime moments. These are the best times of the year to be trading. And when it comes to conditions like this, we change our actions, okay? So we must identify the environments so that we can suit our actions accordingly. So if the consolidation says it's 50-50, what we want to do is we want our bias to not be one-sided, but our bias to be in, out, in, out, in, out, right? And these phases, they last for 3 to 4 months each. So basically one trading quarter. So each trading quarter is going to have its own narrative. It's either going to be consolidating, expansion, and then we want to suit our trading style accordingly. Okay? Because if we had a trading style that was for this environment here, and we try to put it into this environment here, it would not work because this expects trend. This will completely eat the trend. So what you can do is develop a different trading style for this narrative. And that trading style is going to be bread and butter. Okay, so bread and butter is, since the daily chart will be consolidating like this, bread and butter is just like you trading the 5-minute chart, and then you would be in and out at like 1 hour trade or 2 hour trade. You'll be in and out. Okay, and if you didn't take profits from that, it would just reverse against you. Okay, so it's best just to take it off and then find another trade. But when it comes to trending environments in here, that's pretty much trading the 15-minute chart, and you can expect a lot of movement. And you could be a swing trader, you could be a one shot one kill trader, you could be an intraday swing trader. So let's say in at AM, out at PM. right? Instead of in and out, or overnight, in at overnight, out at PM, right? So you're holding for multiple hours within a day. And that's all possible once we can align it correctly with the expansion phase here. Okay, so that's why it's important. And that's pretty much an explanation between environments and yeah, in order to determine, okay, dollar gold bonds, which one is it going to be? Is it going to be this one, or is it going to be this one? Well, if there's two words to describe it, it's this, okay? It's market symmetry. So what needs to happen is dollar needs to trend inversely with gold. So if dollar goes higher, gold goes lower, right? And it needs to trend like that. Okay, it needs to be following the same direction. That's market symmetry. All right? If dollar is going up and then gold's going up as well, that's a big warning sign that you have this potentially. Okay? So that's a big warning sign. You want to see them trade opposite each other. Okay? You want to see them trend. If that's happening, there's expansion. And also bonds. Okay? If that's trending as well, this expansive move can get a lot more supercharged. Okay? It could be more rapid. Okay? So generally you only need dollar and gold for a good read on market symmetry. Okay, you need only two. But if you have that third one, bond, that's when everything could be supercharged. And price is going to make a big run. And therefore, we want to be trading with expansion style. Okay, so intraday swinging. And this is when you can get better RR setups. And you could be more aggressive. As for this one, you want to play more defense. Okay, so within these conditions, unless you really like consolidations and you do well, just try be like a defensive type trader, because bias can be 50-50 and it's tricky in these situations. Okay, and that could last for 3 to 4 months, and those 3 to 4 months, if you're going through a downward spiral, it could end everything. So that's why you gotta be playing defense more, because the edge in these conditions are less. Okay, it's 50-50, so you're gonna have to be more patient anyways for a nice edge to pop up, and that means lower trade frequency, and lowering your trade frequency means you're playing defense more. Okay, and when it comes to trending conditions, you could play more offense, so you could be more aggressive. You could hold for greater swings, greater pulls, and you just want to be basing your career on these type of conditions. But just as, like, you know, stocks or cryptocurrencies or whatever, they have major runs, they don't happen that frequently. So it's the same with indices or currencies or any market. There's going to be its own time, and that's why study the seasonal tendencies as well. Okay, so you'll know the times of the years where you can anticipate either one of these conditions happening, and that will be the time factor. But hopefully that helps, Vitali, and yeah, talk soon.